Good morning. Mid-November, we had actually gains in the grains this week, although with the negative report Friday from USDA, the first report in 2 months, and the big price decline we had Friday, you wouldn't think so. Everybody went home depressed about the grain market. But corn actually gained 3 cents for the week, soybeans up 7.5. The only market lower was wheat, down a cent in Chicago, but Minneapolis was up 3 cents. So overall, not a bad week in grains, but we did have a little problem on Friday. USDA came out with their first report since September. And of course, like all bull markets, it threw cold water on the market rally. And, obviously we were lower. Downside reversals formed in many of those commodities. Live cattle, small losses, 23 cents this week. Feeder cattle up $2.50 after significant drops lately. Gold gained $85 and silver up 2.5. Those markets that looks good on the weekly numbers, but if you look at the charts, it very much looks like these markets have topped and we fell hard late in the week. The ops, basically doing the same thing as the grains on Friday. Let's look at some of the reasons. We had a USDA report Friday, and essentially here's the quote that they had right at the top of it. Due to a lapse in government funding, in other words, to give us more money, from October 1st through November 12th, some U.S. data sources that are typically used were not available for the report. Changes to the U.S. balance sheets continue to reflect all U.S. government data available at the time of publication, but this month, in some cases, that information was limited. Oh, does that mean this report is flawed? It's right at the top of the report. You be the judge. Point being, I think particularly the problem they had was the yield numbers because usually they collect harvest yields and they harvest plots actually. So some of that work may not have been done. What did they do? They reduced the yields. Corn reduced to 186 bushel, but that was 2 bushels higher than the trade thought at 184. Actually, it was a reduction of zero point 0.7 bushels from way back in September, but they still need to gather a lot of data. I think that number is going to go down at least to 185 or less. Many people are lower, and they might be right. Half the country had disappointing yields in corn. Half the country probably had record yields in corn. But I mean, that's the way it is. The other numbers in corn carry out up from trader expectations. Traders expecting 2136, 18 million bushels larger than that. Not a lot, really. World numbers, they were expecting 282.8, actually came out 281.3. That was a little friendly in corn, but the market went down anyway. You have to remember, we went up 20 cents or more, maybe 25 cents in corn since the last report. So the market was expecting more bullish numbers. And in soybeans, we were up $1.30 from the last report. Here's the soybean numbers. Actually, they're all bullish from trader expectations. The yield was dropped to half a bushel from September's 53.5 to 53 this month. That was zero point 0.1 bushel smaller than the average trade guess. So that was actually friendly. Carry out soybeans, traders expected 304, a 4 million bushel hike from 2 months ago. Actually cut it to 290. That's actually friendly. World ending stocks cut from trader expectations of 124.2 to 122. All the numbers were bullish in beans, but the market went down anyway. But remember, we went up $1.30 from the last report. These numbers apparently weren't bullish enough. Or really, was it just the fact that USDA providing numbers, reassuring buyers, providing more certainty in the market, taking away some of that uncertainty that no government reports provide, which usually makes the market go higher, the opposite of what the liars who process our grain tell us. The theory is prices go higher with uncertainty, and with government reports, which is the whole purpose of the USDA, is to drive prices lower. Cheap food, bountiful, plentiful food supply, safe, bountiful, plentiful food supply, which is a cheap food policy. So, think about that. Wheat, no revision really. Well, they actually raised the yields, but it was based on the September report, which you already had. Trader expectations were 867 million carry out on wheat in the U.S. Actual numbers 901. Bearish. And the world number is also 5 million metric ton larger. So the numbers were bearish for wheat, more bearish than the trader expectations. And wheat, actually, these numbers were quite a bit more negative wheat than anything else. What did we do Friday? We went down 10 cents in wheat and corn. They treated all the markets the same, even soybeans, where the numbers were bullish, and soybeans went down 20 cents. I think the final number in corn will be closer to 185, maybe 184. And I think the final number in soybeans will be closer to 52. USDA cut soybean exports 50 million bushels. Big drop. Why? Because they didn't have the production. They had to cut the yield. They're going to do that again. But really, prices have to go up to allocate that. USDA basically said, oh, it probably has already done that because soybeans are up. I don't know. I think we got a bull market. We've ignited in grains, and you could see that on the charts. You've got a bull market ignited. But look at this downside reversal Friday. I think that we're going to continue lower the first part of next week. But I would not be surprised if we turn around. Actually, I would target this area, 424. If you need to buy back grain sold that you sold, I think you need to own it for this bull market, at least in call options. And I would target that this 424 area, and maybe down here 418, a second target to be buying corn. I don't think we will go down to 410, but that's a possibility. It would still be in a bull market as long as we stop higher than 410. But I think you're going to see weakness early in the week. We might see strength later in the week because countries like China waiting to buy for cheaper prices are going to love this downside reversal. But that is a negative on the chart, and I think we will go lower. Looking at soybeans, a little more emphatic in the bull market run lately. We went from 1020 in mid-October to 11 what are we at, 1150 or so. And so obviously we went up $1.30, so the market did rally a fair amount. But look at this run higher. Now if I were targeting buying back soybeans, my target would be right in here in this 1086, 1085 to 1090 area. I think soybeans in the first part of the week could come under some pressure, but you might have to buy them closer to $11 if the market doesn't come down by Wednesday or Thursday. I think this big downside reversal on the chart, though, is going to have some follow-through weakness, and I think that can be bought if you still need to own soybeans back, because I think we've got a bull market. They don't have the yield low enough in either soybeans or corn. USDA even admitted we have a flawed report, especially on the yield data. I think those are going to be revised lower. The wheat market, though, a downside reversal. The numbers were more negative on wheat. And of course, who wants to plant wheat next year? But I think you would have to target this area, maybe 530 or so, even 520 as areas to be purchasing wheat for what I think will also be a rally. But, the downtrend is broken. But, this downside reversal will probably have some follow-through weakness. So those of you who want to own grain back, I would use this opportunity. The USDA negative report. USDA reports are almost always bearish in a bull market. We have an emerging bull market in grains. You got your bearish report. Use it for what it can be. I mean, USDA is what it is. And, that's in bull markets, most of the time, USDA reports are bearish. So here is the spring wheat market. Hasn't dropped, hasn't gone up as much, still a pretty decent buy. Spring wheat might come down and test those lows because, you're so close to it right now. And certainly I would be a buyer of spring wheat as well in that category. But, this is not a downside reversal. We did not go above the previous day's high. For you guys learning the technical trading, we did not go above the previous day's high and then run to new lows, which means, of course, first of all, we were completely fooled by the market. Let's go back and look at Chicago wheat. Chicago went higher than it was for 5 or 6 days. So people thought, wow, this is a bull market, we're going to buy. And then the report comes out, big surprise on the negative. So the market goes down. And of course, you close lower than the previous days, the previous 5 days runs. That's a more significant change in what traders anticipated and then what actually came out in those numbers. So you're probably going to see more follow through weakness. It's more of a surprise of the market. When we talk about downside reversals, everybody made it, call it an attitude adjustment in traders. They went from being bullish to bearish. And the same thing in soybeans. You went to a new high on Friday and then closed significantly lower, 20 cents down below the previous day's low, although not as, over the previous number of days, so not as bearish as wheat. And, go back to corn, right back to the old highs, closed significantly lower, but probably not as negative as wheat in that technical formation. This is what you're reading in technicals, the emotion and the surprise in the market. How different did things end up? And that's really how technicals work. Traders were maybe surprised, or you got reassured there are numbers, there is supplies out there, not going to run out of wheat, not going to run out of corn. We might run out of soybeans, but they're a little reassured now, at least from the uncertainty. And I think that was a surprise that the market had. Actually, the numbers were bullish soybeans and somewhat bullish corn, but market goes down anyway. So the other markets where there's significant things happening is feeder cattle. Feeder cattle running right down to those recent lows, but we closed on the high of the day. We had a $10 range Friday. But I think this technical formation is still indicative of this was the top, and you're not going to get back there. If you're going to wait to try and get back to this old high, and by definition, tops mean it ain't going back there, you're never going to sell cattle. You might end up selling them for $260 if you don't price something, and because you're in a downtrend now, the market top, you're going to continue trending lower. You might, this was a good sell point. These were good sell points. Now you're going to, if we penetrate and go lower here, you're going to be trying to sell at 320, and then of course it ratchets down. The definition of a top is it never gets back there. Never gets back there. So now that we know that's the top, you should not try to sell back there. That price is gone. Now you have to get the next best price, and that's basically what we're talking about. Live cattle, our market top, I think, was 250. You got a recovery, a little lower high, and now potentially a lower low this week. Although it was a nice recovery on Friday. We'll have to see if there's follow through. So, gold and silver closed higher for the week, running from here and ending up here somewhere. This is not a good formation. You have lower highs, and if we penetrate this low and go lower, you pretty much have established that the downtrend is in place. And the next chart is silver. Silver actually went to a new high, ran all the stops, and then closed downside reversal on Thursday. Big time follow through here on Friday. We are still trading above 50, though. Here's the key question. Is silver still in a bull market? You have actually a higher high. And the question is, do we go to a lower low here, or do we hold and continue to run this market higher? This looks like a top. We dropped 16%. I kind of wonder if we didn't just run those stops there, but that is not yet a certainty in the silver market that has topped. So a lot happening here in the markets. We get a negative report Friday from USDA. Now we go home on Friday thinking, oh man, grains are never going to go up again. That old rotten feeling in your stomach that you missed the rally. I don't think so. I think, in fact, because gold, silver, precious metals, cattle have probably topped, and money from funds is flowing out of there. And actually, grains, if you look at a long-term charts, we're at basically the bottom 25% of the last 10, 20-year range. I think we just started our bull market. I would look at Friday's correction as a correction lower. We will see follow-through weakness, I think, especially in wheat, to run the first part of next week. I would look at later in the week at trying to buy back any grain that you still have priced, sold for 25. And because I think this market has potential, at the very least, buy it in calls. I actually like deep in the money calls, but From a cash standpoint, I think we'll still be selling soybeans to China. They have a commitment to buy a fair amount of grain. Haven't bought a lot since they wrote that agreement, but of course, soybean prices are up $1.30. What are they going to do with soybean prices down 20, 30, or 40 cents? So point being, I think that in terms of the value of grains, in terms of the precious metals, which recently ran to new all-time highs, in terms of gold, you can buy more grain, almost twice as much grain now with an ounce of gold than maybe you could in the history of the world. And so obviously, grains look underpriced relative to precious metals or cattle. So be interesting to transition as the funds move money out of those crops or commodities, which look like they've topped, and into other cheap commodities like grains. It'll be interesting to see what happens in the next 6 months, even next year or two or three. I think that we're going to have a little turnaround in grains. Of course, we're just starting the rally, but I think you have to think about what all the other movements in the commodities are doing and what that means to the grains. If you have a great weekend, you have a lot to contemplate, and good marketing.